Hello, my name is Ziad Al-Dabag. I am a Forex Optimum broker financial analyst. American economy is gradually reopening itself after the lockdown and the fundamental data comes out with a more positive tune than we saw in the last 2 months. Well, this week ISM PMI manufacturing, which is forward-looking indicator for production activity, has also recorded a positive sentiment in the US industry with an increasing pace. The overall optimistic sentiment is supported by the demand for risky assets and changing expectations over the interest rates in the United States. And according to the CME futures, on the probability of Fed's rate changes, the interest rate are expected to be unchanged at the next Fed meeting. However, the possibility of that decision has decreased from 98% a week ago to 91.4% as of now. The same situation is recorded for the longer term expectation of the interest rate changes as well. Now, the demand for risky assets is supported by the rising US abroad S&P 500 index that topped 3,141 mark. Amazingly, beautifully done. We maintain positive expectations for the S&P 500 trend and expect it to move towards historic highs of 3,393.52 recorded in February early this year. Along with the rising demand for risky assets, safe haven assets like gold are expected to be in demand too, as the second wave of the pandemic remains as quite possible scenario. However, the demand for such assets will fade as the economic situation will improve in the United States and the rest of the world. Now, gold will continue its consolidation in the range of anything between 1,650 to 1,440 per ounce in a day. The yield curve for the US Treasury bills in its right hand side could move gradually higher. The more active yields it could be we see in the medium and the longer term bonds. The 10-year US Treasury benchmark yield soared to about 0.87% just over a week. However, such a strong growth in yield should not be expected in the near term. There is no reason to expect that the Federal Reserve will somehow tighten its monetary policy this year, and the oil market is desperately waiting for the OPEC meeting, which was scheduled first for June 4 and then rescheduled for June 6. Investors expect the extension of the current production cuts to 9.7 million per barrels, or almost 10% of the global crude output for the next 2 to 3 months, or it could be up to 1 quarter, right? So this decision, along with the revival of the global economy and driving season in the United States, may speed up the recovery in the oil market. The expectation pushed the benchmark of the Brent crude oil about $40 per barrel, right? Well, this trend may continue on the next week as Brent crude is expected to rise anything between $41 to $42 per barrels, right? So all in all, investors should also be aware of the possible pullback as soon as we see these targets will be met. All right, so that's all for the day. We will be seeing you again for the more updates. Thank you very much. Bye bye.